Welcome to 10 Minutes About Gas. Today we are in Copenhagen, Hello, joined by Arne Lohmann Rasmussen, Chief Analyst and Head of Research at Global Risk Management. Welcome to you, Arne.
Thank you.
What is the status in the gas market after the war between Iran and Israel? How did the war impact the European gas market?
We saw a spike in European gas prices when the war broke out. I think for two reasons. First of all, Israel was an exporter of gas. They have some fields in the sea that where they transport by pipeline gas to Egypt. That was cut off for security reasons. They had to close down the gas fields. Secondly, there was a concern about the LNG from Qatar going through the Strait of Hormuz, and it's roughly 20% of global LNG that would be cut off in to the market, and that would send prices higher. So the market priced in a risk premium of some €5 per megawatt hour, just as we saw in oil, for example. When the war stopped, there was this peace agreement after the 12 days. This risk premium was basically priced out, and we are basically back to prices that we had before the war started.
Let's assume the war is over. Are we back to normal now, would you say? Or what is your...
It is, of course, it was a sort of a wake-up signal to the market that this is a sensitive market. It is especially sensitive that if LNG supplies for some reasons are cut off, it will have a big impact on prices also in Europe. But in a way, we are back to square one.
The EU Commission has put forward a proposal to phase out Russian gas from 2027. How are these plans going on?
The proposal has been put forward, and it's going to be a law. All the sanctions on Russia have been you needed a full all 27 countries in the EU had to agree on that. But this is going to be a law, so if you get the 2/3 majority among the countries and a simple majority in the EU Parliament, this will come into law. The usual suspects, Slovakia, Hungary, they are critical of this proposal, but we have also seen France and Belgium being a bit critical. They are big importers of LNG, but the really big importers, the Netherlands and Germany, they are in clear support of this. I think we will see this phase out of Russian gas. A lot of it has already been phased out. There's no more gas going through Ukraine. The Nord Stream pipelines are closed. There is basically only coming some LNG and some gas through the Turk Stream.
We have talked a lot about inventories on gas in the EU. What is the status here? Are you still concerned for the upcoming winter season?
I'm a bit concerned, but I think it will sort out. But we are basically some 20 percentage point below the level we were a year ago in the EU, actually a bit more in Germany. So we are seeing the impact of the lack of Russian gas going through Ukraine. Previously there was some quite strict rules about they had to refill to be at 90% in the beginning of November. That has been eased, so there's not that panic in the market about these inventories as we saw just 6 months ago, for example. But I think it can come back in the autumn, maybe in October, if we're still below the level. Last year we are below 80 level, that the market gets concerned. What if we get a cold winter and all that? We're also seeing some things on the demand side. For example, that there's bigger issues with the French nuclear power plants. Could that give them a bigger demand for natural gas? Of course, a lot of focus on how will China do. Chinese LNG import is quite weak this year, but it seems like the latest numbers tend to indicate that things are improving. But the LNG import into Europe is very strong. But if we end up in a situation where China suddenly recovers, starting to buy a lot of LNG, could that be on the expense of Europe? So Europe have to bid up prices. So the inventory situation is it's not as good as it was last year, and it is a bit of concern. I think that's the main focus we will keep an eye on for the next couple of months, how these inventories are developing.
How do you see prices developing over the next 6 months and next year, 2026? How should our clients hedge their exposure, in your opinion?
Yeah, first of all, of course, there's a lot of moving parts here. If we're going to say something about the future price, we talked about the inventories. We talked about would China LNG pick up again? It's been very weak this year. Egypt has become a big buyer in the market. The French nuclear power could have become a risk premium return to the market if the peace agreement in the Middle East is broken for some reason, so it escalates. Once again, I think that some of the things as a client you have to, if you're on the consumer side, to have in mind. So my sort of advice is to have a relatively high hedge ratio over the winter months, the next 6 months, basically. Then we're looking into to next year. Next year, I think it will be very much a battle between a demand side still relatively okay, especially in Asia. We're phasing out more and more of the Russian gas, but there's also a lot of, especially US LNG, also some LNG from Qatar coming to the market. Will that be able to sort of make up for that? So when will the tipping point reach where the US LNG is really hitting the market, depressing prices? That tipping point might come later. We have lower prices in 2026 compared to today, so there's what you call a backwardation in the curve. I think that's something to have in mind from a consumer point of view. So, but maybe a normal sort of hedge ratio for next year. And then if we see a dip in prices, maybe €5 or something like that, that could be a good time to sort of evaluate. Maybe we should add to the hedging ratio at this point. But for now, a more neutral stance towards next year.
What about speculative money? Do speculators still play a major role in the TTF gas prices?
They do. I think they sometimes accelerate or make moves bigger. So when prices are good, they extend the move, but they can also tend to extend the move on the downside. But at the end of the day, this is a physical market. It is about how much gas is in the market, how large are the inventories, and so on. So, but on the day-to-day, week-to-week, maybe month-to-month, they definitely play a role. And we saw during the war that they really added to their long position, betting on higher prices. Let's see when we have the data for this week if they have taken all these bets away again. But the market is probably where they can add more bets for higher prices, which on the margin would tend to push up prices. But they definitely create some volatility from day to day.
Very well. Thank you very much, Arne.
Thank you.
That is all we had time for today. Thank you very much for joining us. And I'm excited for next time to be joined by Arne, where we'll be diving even deeper in the gas market. Thank you.